What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Plug Power Incorporated, ticker symbol PLUG. This company just reported their Q1 results this morning before the bell, and the stock's up nicely, a little over 4% at the current time of recording. So we'll talk about the numbers. We're going to jump into the Plug Power numbers. We'll take a look at the revenue growth, the cost, the profit. We'll take a look at the balance sheet as well. They just did like some capital raise, some fundraising. So we'll talk about the significance that had on the balance sheet, and we'll obviously look at cash flows as well when we're talking about a company like this. And then we're going to take a look at the stock chart as well. This thing was on an epic downdraft. Man, this thing was up at $75 per share, and it absolutely got crushed all the way down to about $18 per share. Now, it has bounced back. So we'll talk about this from a technical level and talk about, is this a start of a new uptrend? Is this just one of those bounces that every stock tends to have when they go from $70 down to $18? We'll talk about that, and we'll talk about some of the indicators that we see there. Now, Plug Power over the last year still up huge, even though you've had this big downdraft. This was like basically a penny stock a year ago, up 444% over the last year, but year to date down pretty heavily. Okay, down about 12%. And even when you look at the 6 months, you include some of these higher highs that it's made, you're down probably even a little bit more than that. Now, the market cap is big on this one, about $16.5 billion. Also, what's pretty significant is this short interest as well. You're sitting at about 10.5% of the floated shares are sold short. And we'll talk about that when we get over to the numbers. We'll talk about, like, everybody gets to look at these numbers. Everybody gets to look at the same stock chart. And so why are so many investors, or a significant number of investors, short this stock? So they just reported their Q1 results. We're going to take a look at these. Look, I've been bearish on this stock. This is a stock I have not been excited about, but every quarter allows you to look at a stock from a fresh perspective. So that's what we're going to do today. So we won't worry about the press release. We'll just jump right into the numbers. This is our statement of operations, essentially a profit and loss statement they give us for 3 months ended here. Right-hand column is last year. Left-hand column is the last 3 months of this year. So we've got our net revenue on top. We see sales of fuel cell system and related infrastructure up huge, up like more than double. Okay, we went from 20 million up to about 40, we'll call that $47 million. That's really solid growth. We just looked at fuel cell, a stock just a little while ago, maybe a couple weeks ago, and they had declining revenues. Okay, and that's a huge red flag. Whereas what I'm seeing with Plug Power, they're actually doing a nice job increasing these revenues. We've got services, that's basically down just marginally. We've got power purchase agreements, that's up a little bit as well. We've got fuel delivered to customers, which is probably a key metric here. That's up nicely as well, 7.3 million to 11.1 million. You got a little bit of other revenue here. So that gets us to our total revenue, or net revenue. Look, we went from 40.8 million up to, we'll call that $72 million. I mean, that's not quite a double, but it's pretty darn close. So that gets you excited as an investor. Okay, when you have this type of revenue growth on the top line, should make you excited as an investor. And you can see why, potentially why this stock has kind of bottomed and gone on a little bit of an uptrend. You know, investors may be anticipating this type of revenue growth and following through with it today. You see the stock's up close to 6% today. So let's move on to the cost of revenue. Look, it'd be all good if we could just stop at the revenue growth and that was it. But the people that are short this stock and are bearish this stock have not done that. Okay, they've looked at these costs as well. So here's our sales of fuel cell system and related infrastructure. You see in the last quarter, we spent about 14 million to make this 20. So in the most recent quarter, we'll call that 29 million. So we spent 29 million to make 46. Not necessarily what I would call a high margin business, but certainly not a low margin business, at least on that side. Now, unfortunately for this company, as take a look at services as well. We went from 10.3 to 13.6. I say unfortunately because we spent this 13.6 to only make 6. So maybe that's somewhat of a loss leader to get this top line revenue, this 46 million. But either way, you got to kind of factor that into the kind of the gross margins or the net margins of this company. They're basically negative when you factor that stuff in. We've got this provision for loss of contracts. That's not really related up there. We've got our power purchase agreements. Take a look at this. We spent $18.3 million to make 7.8. Guys, that's negative. So imagine having a lemonade stand out front and spending 50 cents a cup on your lemonade and only charging 25 cents. Okay, so you'd have to have a conversation with your kids that they're not really running a sustainable business. Same thing is happening at Plug Power. Okay, we spent $13 million to make 6. We spent $18 million to make 7. Take a look at fuel delivered to customers. You spent $22 million to make 11 million. So this is why in the comments of the video, I'm sure we'll have people comment down below. Well, they're working with Walmart. They're working with Amazon. Hello, guys. You guys think that the CEOs and the executives at Walmart and Amazon are dumb? They look at this. Fuel delivered to customers. It cost Plug Power $22 million, and they only charge customers like Amazon and Walmart $11 million. You think that a CEO of a multi-billion-dollar corporation likes getting fuel for less than what it actually costs to deliver to them? Absolutely. That's why they're dealing with a company like this. So if this company has to raise prices at some point, which it looks like they have to, will those customers be there? Will this fuel delivered to customers continue to rise? I think those are questions investors need to ask. So we got our total cost of revenues, $84 million. That's up from about $50 million. We're still negative on the gross margin side. I can't stress, a lot of people that invest in these companies, you're doing a great thing looking at these numbers, dissecting them, but I don't think enough investors understand that spending $84 million to only make $72 million, how big of a red flag that is. And this is probably the number one thing that short sellers are seeing. And maybe from a technical perspective, once the stock broke some of these technical levels, it was going to come down. But just in my experience, I do never, ever, ever invest. In fact, I would just stop the video right here. If this was a stock that I was looking to invest in, I would stop it right here. I don't have time to waste. There's hundreds, maybe thousands of other companies that you can potentially invest in. I stop it when you have negative gross margins. I stop looking into a company. This is a huge red flag for me personally, maybe not for you. When we get to the balance sheet, cash flows, maybe it paints a different story. But again, this is like having a lemonade stand where the cup of lemonade costs you 50 cents and you sell it for 25 cents. It's not a sustainable business and it has to turn around. And you see over the last year, it actually has gotten worse. Even though we've bumped up our net revenues, our gross margins have continued to go negative. Okay, we lost 12 million, we lost 9 million in the previous period. So it's not necessarily going in a great direction. Now, unfortunately, there's other expenses. This is why I stop at the growth side, because there's other operating expenses. Okay, you have R&D, you have selling, general, administrative, and you've got some other expenses here, which are minor. Now, here's the deal. Our research and development, that more than doubled. Here's selling, general, administrative. I know we almost doubled our net revenue here. Okay, that's sales, essentially. Well, look what we did. We more than doubled our selling, general, administrative. We went from 11 million up to $25 million. So in operating expenses, you're sitting at $36 million. So you had $84 million in product cost. You have $36 million in operating expenses. You get to add back in your $72 million in revenue. And what do you get? An operating loss of $48 million. So they lost $48 million in the quarter. That's almost double where we were last year. We lost $25 million. Again, we almost doubled our net revenue, but it didn't flow down anywhere on here. Okay, we're still selling this product at a loss. Customers like Amazon, Walmart, anybody that needs this fuel is just salivating that Plug Power is willing to basically give it away at a loss, basically because shareholders are subsidizing them in that effort. The other thing that is being subsidized is take a look at the weighted number of shares outstanding. We had 305 million shares of Plug Power. So if you had one share, you were one of 305 million. Now you're one of 513 million. So you have heavy dilution in this one as well. I wanted to zoom up to the balance sheet because they did do some fundraising. We'll see evidence of that on the cash flow statements. So we've got our cash and cash equivalents up here. That's $4 billion. Hello. Okay, so $16 billion valuation. Tell you what, the market is not really giving them a lot of credit here, okay? They're trading basically for 4 times cash, and they've got a little bit of restricted cash. You've got available securities. This is basically another probably $400 million right here. You've got a little bit in receivables. You got some inventory as well. Got some prepaid expenses. All in all, you've got like almost $5 billion up here on the current asset side. That was up from just the beginning of the year. They were sitting at 1.6. So this is a company that's trading at like 3 times their current assets. So tell you what, you can make an argument that if they can start turning this around, and I'm not saying they can't, okay, maybe they can elevate the price. Maybe there is kind of an economy of scale here, okay? Tesla probably sold cars at a loss. When we look at a NIO, they've sold cars at a loss. I'm sure other companies out there, many other companies out there, have sold products at a loss and generated, kind of an economy of scale to build their business up. Maybe Plug Power is going to do that. And if they do, I tell you what, pretty reasonable valued when you take a look at all the cash that they have on hand. And they're burning through cash, but it's not, when you have this much cash, it's not that big of a deal. Now, how they have financed this, they have a little bit of long-term debt down here, $139 million. You got some convertible notes as well, $191 million worth of that. They've got some other stuff going here. Total liabilities coming at $867 million. And then we talked about the dilution that is happening in the shares as well as you raise that type of money. Now, let's take a look at cash flows. Maybe the cash flows paint a completely different story. You've got our 3 months ended here. Last year's right-hand column. This year is the left-hand column. We pull down this net loss number. That's $60 million. We get to add back in some things, stock-based compensation, depreciation. Those are non-cash type of stuff. We get down to the net cash used in our operating activities. Tell you what, it still paints a terrible story, okay? We basically doubled our net loss. Yes, we almost doubled our revenue, but we almost doubled our net loss. And unfortunately, we basically doubled our net cash used in operating activities. So they're burning in a quarter over $100 million. And so if you keep that up, yes, they have quite a bit of money sitting here on the balance sheet, but you keep burning through over $100 million per quarter, just running the business, okay? We haven't talked about investing activities as well. Okay, that is some significant burn, okay? Now, we've got purchase of property, plant, and equipment. We went from 2.5 to 9.8. If you flow through, I'm at the bottom of these slides. At the top, they've got slides and pictures and all this glorious stuff. They're doing significant amount of investment. I wouldn't expect this 9.8 to be kind of a one-time thing. I think they're going to continue to have to do that. Okay, so we've got a little bit of $3 million there. Got purchase of available securities. That's a little bit, it's a little bit different here. I wouldn't necessarily look at this as cash flowing out of the company. It's basically them taking cash and converting it to something else. I would pay more attention to what we've got over here. We've got purchase of property, plant, and equipment coming in at $10 million. If you're burning that every quarter, I know that drives revenue and those types of things. Just some things you need to think about. Now we've got our financing. How are they financing this? They burned through $100 million here operating the business. Well, we got these proceeds from public offering. They're financing this business really from you, the shareholder, okay? So basically you, the shareholder, are subsidizing customers like Walmart and Amazon and whoever else uses this company's fuel. You're basically subsidizing big corporations who can easily afford to pay the full price for the fuel. But because there's shareholders out there that are willing to subsidize a company like this, well, then companies like Amazon and Walmart and anybody else that uses this type of fuel actually getting the fuel at a discount, and in fact, a loss less than what it actually costs to put into the trucks or anything that happens to operate off of this type of fuel. Look, they raised $3.5 billion, got some other exercise of stock options here, some warrants as well. This all is dilution. This is all adding shares to the share count, and it impacts you as the shareholder. Now, let's jump over to the stock chart. We see the impacts of dilution. We see the impacts of negative gross margins. We see the air kind of coming out of the balloon on this one. Okay, this stock was way up here at $70-something per share, and again, bottomed out down here at 19. Now, is this... Sometimes people refer to this as kind of like a quote-unquote dead cat bounce, which is, if you like kitties, it's probably not the most tasteful saying out there on Wall Street. But here we are. We're actually at, I wouldn't necessarily call this a very critical level, but what I want to point to you is a couple things here. So I'm going to draw some lines here. So I want to show you this price action right here. Look at how this company gapped up from 33 all the way up to the $60 level. And it did it like in a matter of days. I mean, this thing gapped up and there's very few candles here. And so what it did is it created this base up here. But once you broke this level, all these gaps basically got filled by price action. And notice it did take some time for this stock to come all the way back down, but it came all the way back down through this price action here. And not a ton of heavy volume, but there is, see this big green candle right here? There is a significant amount of volume right here in this area, and it's right above where the shares are trading at now. I would say between $34 and $38 per share. There's some heavy volume on here, and so this is a level that I've marked out, and it's not exact. I wouldn't necessarily look at this as like a hard line in the sand, because these technical levels aren't like pure, like just crystal clear. But anywhere between $34 and $38, I would actually expect sellers to kind of step in on this one too. You got to expect too. You got a lot of sellers up here as the share price approaches these levels, especially up here. If it for some reason were to get back up to $60 per share, you'd see a lot of overhead resistance as well. You see the volume quite heavy up here. The other thing that I noticed, I had to put volume rate of change. So you've got volume right here where my cursor is on the right-hand side of the chart. Down below it is actually volume rate of change. You're seeing it actually go down. And so even though we have this kind of uptrend with Plug Power, the volume, the people that are willing to step in here and buy this stock, is actually declining a little bit. So it leads me to believe that maybe this was just kind of a technical bounce in the stock and not necessarily a change in reversal, kind of reversal in trend and headed back upwards. So what I would look for with Plug Power, if you're long this stock, if you want to buy this stock, you need a break above this 34 to 38 level. You get above this. Again, now we're churning through. Yes, we have this price action here, but again, we don't have a lot on the other side of it. So I would actually expect Plug Power not necessarily to cut through the 38 up to 60 like a hot knife through butter, but maybe just a regular knife through butter still cuts pretty cleanly. Okay, I would actually expect that if this stock were able to continue this momentum upwards. The other thing you'd want to see is kind of an upward trend in this volume. It's still kind of trending down, which just, again, leads me to believe that this could be a fake out. The other thing this leads me to believe is this $34 to $38 level could be very hard to churn through, and you might break down below. But we have a low here and a higher low here. So technically, you're not looking for this thing to get below about $28 per share, which, again, is only about $3, $4 over where the stock is right now. You're looking for Plug Power to stay above that in the coming weeks ahead, and then potentially plow above that if you're bullish this stock. If you're bearish this stock, you're looking for a break below $26, $27. You do that, it's probably coming down to 24, maybe even retesting these lows again down here. So that was Plug Power. Hopefully you guys enjoyed this video. Interesting look. I know we look at a lot of mega cap companies on this channel. It's always fun to kind of take a look at one of these companies that are still kind of working things out. Hopefully you guys enjoyed this video. We'll be back again very soon with more. Good luck with your investments.